Pleasure
Thanks a lot.
speaking with you. Thanks a lot for joining
Thank
in
you.
and have great travels this year once
Thank you very
again. Wish you the very best. But as we were saying, channel checks by several brokerages indicate that consumption has been declining post the festive period owing to the overall inflationary environment. Checks also exhibit that a large part of the pain is seen in smaller cities. So to get a ground check on how things are shaping up, B. Thiagarajan, the Managing Director at Blue Star, is joining in. Mr. Thiagarajan, good morning. As Mr. Sridhar was just mentioning, that there could be perhaps earnings downgrades as well because of the slump that we're seeing in demand and consumption. Can you quantify it for us? What is the kind of pain that we're looking at? And now with inflationary pressures, do you see further slowdown?
Good morning, Sonia. Happy New Year to you and
Happy
your
New
team
Year.
and the audience. It's a pleasure talking to you. I do not see that in the segments in which we operate. So take room air conditioners. Given that the penetration is low, the segment continues to do well. The price increase has been there for the past 24 months. We have been increasing the prices, and there is no room for increasing the prices further. And the demand holds. I foresee it will continue to be so building up to the summer season, despite even the energy label change, which normally pushes up the prices. On the B2B side, the commercial refrigeration continues to do well. Processed foods or pharma, these are the segments which are driving. And the infra segment, metro railway, data centers, manufacturing, the order book or order inflow is at record level. It continues to be so. You have to wait till January 31 for seeing the Q3 results as well. I would attribute that to the lower penetration in room air conditioners as well as commercial refrigeration. The capex cycle has begun, therefore B2B side, the order book continues to be good. Of course, there is margin pressure, but we have learned to live with that for now more than 9 months.
Okay. Good morning, Mr. Thiagarajan, and hope FY23, 2023 is a fabulous year for you and for everyone in your family and at Blue Star. You said that you'll learn to live with margins. So can you give us a ballpark of what you might do in terms of top line and bottom line growth? I mean, bottom line, can you even hit 500 crore?
I am not able to hear you clearly, Lata. There is some problem with the audio system.
Okay, okay. I was asking you if you can give us a good guess of how much your revenues and your bottom line may grow. Will your bottom line touch 500, 600 crore?
I will not jump to that. I would say the growth in the top line as well as bottom line should be more than 20%. That's what I expect. You have seen the trends during the past couple of quarters, and that trend will continue. And margin, you asked me that what did I mean by learn to live with that? We thought that the easing in commodity prices will improve the margins in the second half of the financial year. But then you have the rupee depreciation, which is offsetting the savings that you will achieve in the commodity prices. Having said that, Blue Star Climatic Limited, which is the Sri City plant, the new manufacturing unit from which Blue Star will source the products, it gives us some margin improvement. Basically, because it is located in South, both inward and outward logistics benefits are there. And the next thing is the scale itself is also going to help us improve the margins. So therefore, we continue to maintain throughout the year. The segment 1 between 6 to 6.5%, segment 2 8 to 8.5%. That will be the margin levels. You have seen in Q1 as well as Q2 these segments still, despite the commodity prices escalation, showing improved margins. So it is through certain other operating leverages we will be able to maintain the margins.
Okay, all right. So, Mr. Thiagarajan, just to confirm that the UCP margins that you were guiding for 8 to 8.5% and an improvement from there on, you're sticking to that. I asked this in light of, Voltas, they've been sounding a little bit skittish on their margin outlook from here on. But you believe that 8.5% is pretty much on the cards, right?
It is on the cards.
Okay, all right. Also, price increases, I think you briefly mentioned that y'all are not looking to increase prices from January itself. The last time you told us you're looking at a review, so you're not increasing prices from January as well.
Not at all. So I did mention to you all that we will have a look at the prices once this quarter is over. We are not planning to increase. In any case, Nigel, what happens is for the summer season, new range of products get introduced. And these will be in line with our strategy. It is affordable premium range. We will go ahead and ensure the products are optimized for various markets and various segments. And therefore, there is no question of price increase from January 1.
Okay, okay. I also wanted to talk a little bit about the entry that you're looking at in the lower range premium segment in January. You were planning to do that for lower tier cities. How is the demand at the moment? What is the kind of growth that you see over there? And you were planning to increase your dealer network as well. So what will that look like over the next, say, 6 to 12 months?
You're absolutely right, Sonia. More than 67% of our sale come from tier 3, 4, 5 towns. Due to the good agricultural income, we are beginning to see a surge in demand in the rural towns as well. We are all concerned about global slowdown, inflation and all, and I have not seen this kind of optimism in consumption in those towns at this point of time. So therefore, there are few things that are happening other than the products that are meant for them. Those segments, we are expanding the network, and I see multiple things happening there. There is the e-commerce which did badly. They are trying to do more in those markets as well. And we are looking forward to the implementation of ONDC. I think it will be a game changer because quite a few dealers will be able to directly participate in the e-commerce value chain. Similarly, quite a few e-commerce players are connecting to the distributors to reach the products to smaller towns. So therefore, the distribution architecture is undergoing a very massive change. And we are ahead of the curve there. We are doing quite a bit. Lastly, the marketing in terms of brand building in those markets.
Okay. Mr. Thiagarajan, when you last spoke to us, you said that because of the stop-start Chinese behavior, you all are, building up your inventory of inputs. Now that China seems to be off its zero-COVID policy, will that policy undergo a change? And will that be some of those cost optimizations that will help your margins?
I wish we are able to do that, but still the uncertainties are continuing there. Therefore, from the normal level of, say, 45 to 60 days, they are holding inventory of components between 90 to 100 days. This is continuing. And specifically at this juncture, it is quite uncertain. But the good news is that we are finding the factories working to full capacity there. And so there are no major concerns about disruption. At the same time, it is not giving us confidence to reduce the inventory holding at all.
Okay, all right. Mr. Thiagarajan, final question before we let you go. Competitive intensity in the room AC market has gone very, very high. I think it's the highest we've seen in the last few years as well. Smaller players, larger players, everyone's grappling out there. You had given us a rough number that you're looking to increase your market share from year on. I think by the end of this year, 13.75%, and later on you want to take it to 15%. You believe this is still possible? And are you seeing some cooling off of this competitive intensity?
I would say the competitive intensity is stable as one can imagine. I think it is a healthy sign there is good competition. But our market share goal and the targets that we have indicated are intact. We will do that. We had indicated that by FY25, we will be a 15% market share player, and that's very much on.
Okay, all the best for your targets and thanks a lot for joining in. So order inflows continue to be at record levels. There's a 20% growth that they're looking at on the bottom line and top line, and a 15% market share is what they're targeting over the next.
Overall, a very
years.
optimistic
Yeah.
outlook. I mean, saying that in tier 2 cities, where is the slowdown?
Yeah. All right, let's do one thing. Let's move to the cement sector now after a short break. HM Bangur of Sri